You put the company on track for a 3-year restructuring plan, and you seem right now to be ahead of your targets, incrementally where you should be. Are you thinking about raising your expectations, raising investors' expectations for profit and your performance?
So first of all, good morning to you and to everybody. We're pleased with the results. We're not going to change targets. From the beginning, at the end of 16, we said that we set the targets up to the end of 19, and we will hold these targets through the time. Hopefully, we're going to beat the targets, but the targets will stay there up to the end of 19. We feel good about that. We feel on track to reach or beat the targets, and we just need to continue working as we have been doing for the next year and a half that we have in order to fully deliver them.
So it helps to have a decrease in natural disaster claims. That's obviously not something that you can count on going forward. And indeed, I wonder if you see the trend increasing for natural disaster claims, although you escaped that fate in this quarter.
In the first half of this year, the natural disasters have been slightly higher than last year, slightly. And last year wasn't a light year in the first half. Of course, the second half of last year was especially heavy because we had the storms in U.S. We're not counting at all on any good or bad luck on natural disasters. I mean, they come as they come. But again, H1 was not especially helped by that because we were slightly above the year before.
You were, and of course, I'm sorry, we are talking about the first half of the year. It's not a quarterly profit report that we're citing.
Yeah.
You were able to raise premiums in the main unit, the property and casual unit. Do you expect to be able to continue to do that, and at what pace?
Yeah, you're right. I mean, we had a successful first half of the year on premium growth. Of course, we count on that. We have lots of initiatives active on customers' development, and customer retention is going quite strongly and positive in H1. And we hope that this is going to continue in the second half of the year. However, what we also target is the profitability of the property and casualty business, and the profitability for us comes on top of it. So if we will see the market softening, then we will take the consequent actions, and we will reduce the growth because we prefer profitability to growth. Where we just chase growth is in life, and it's also at Farmers. Those are retail business, or as life, a very interesting market for us, businesses where we just want to develop our size quarter after quarter.
Which part of the business are you most passionate about, Mario? I mean, you've come into this with a lot of energy. You're making a lot of moves here. What are you most excited about in your job today? I'm very, very excited about the success we're achieving on customers and metrics and customer satisfaction. These are very remarkable success for us. We are tracking now customer satisfaction through all our markets, and it's moving up pretty steadily quarter by quarter. And then we see the benefits of this in higher retention, higher loyalty with our customers. This is an exciting job. It's turning the organization to become a customer-focused organization. We do regular customer calls. All of us do that. We're engaged in responding to customer needs. Is really changing the culture of the organization in ways which were unthinkable years ago. This is what really I found it exciting, and I found it really important to shape the organization for future success. That said, you have a goal to cut $1.5 billion of cost out of the business by next year. You've reported that you've already cut $900 million by the end of the first half. Do you expect to achieve that target early? Do you expect to overshoot that target? we're very confident to achieve all the targets we set in 2016. The cost target is one of those targets. We continue being on track of it. This is what we planned to be at this point at 900. We'll continue through the year. We plan by the end of the year to be above $1 billion. Actually, we plan to reach $1.1 billion by year end, and then we will have $400 million left for next year. This is a very ambitious target. This is a nominal reduction. All included. It's a visible one. I mean, everyone can check that as a nominal number in our accounts, in our P&L. The fact that we are on track after a year and a half, I think it's an impressive demonstration of discipline, consistency by the organization.
One of the things that you've done to reshape the business is make a flurry of acquisition to rebalance your the weighting of corporate and retail clients. You've kind of touched on that. Do you expect to continue on an M&A path? And if so, how much cash do you have set aside for that?
Yeah, we did some quite interesting M&A. Our philosophy is that either we go for strategical acquisitions like the one we did on travel and services, where we wanted to build a global platform. And now, after 3 progressive acquisitions in a year and a half, we do have it, and we consider that an extremely powerful platform to develop in the next years. Or we go for countries development and acquisitions, and so we targeted Australia, where we did 3 progressive acquisitions in the last 2 years, and now we're market leader in the Australian market, which is a market that we particularly like, and I think also we're very competent there with excellent skills. We follow the same path in South America, where we had a number of acquisitions, one after the other, and now we're market leader in Argentina. We're quite strong in Brazil and Mexico too. So yes, we'll continue with the same philosophy. We'll continue working on country strength, and we'll continue trying to achieve market leadership in the markets, in the countries that we particularly focus on. We're not believers in cross-border acquisitions. We don't think they work extremely well in the insurance sector, but at the country level, yes, they're very effective.
You know, the results are positive. You're optimistic about, very optimistic about your turnaround. You're well on your way. But I just wonder, finally, Mario, what are the biggest risks? What are your biggest concerns in the insurance business for Zurich?
So insurance is all about risks. So we live with risks every single hour of our days. We try to put these risks under control. And the continuous struggle we have is to manage the risks in a way which will generate expected results on the organization. So far, we've been able to do it. It's a daily struggle. We wanted to make the organization predictable and not randomly behaving, and we're pleased that in the last 2 years we have achieved that. Of course, we are concerned, as everybody else, for the geopolitical risks. We see a lot of them around the world. And the other big risk that we see for our industry is the time, how fast is this customer transformation happening, and how quick we are in delivering to the customers what they want. And this is where really we are putting all our efforts to be as fast as possible and anticipate even the customer needs.